Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, see what people are sharing, and I'll share my opinions. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, I dive deeper into all of these topics, looking for potential investment opportunities. We do have a coupon code, May Day, which is still active at this time. It's 50% off the first month for a monthly membership, and it is a larger discount on the yearly membership if you'd like to sign up for a yearly membership or switch from a monthly to a yearly and save some money. So Bitcoin Teddy, it says, why is Michael Saylor all in on Bitcoin? Watch his epic rant about the myth of diversification and whether it takes conviction or common sense to go all in on the best form of money humanity has ever had. And he was obviously talking with Tom here. I listened to it and I don't ever go all in on one thing. I guess I just don't have conviction or the common sense to go all in. Now, he said that Bitcoin is the best engineered money by humans. My question is, why would people choose Bitcoin, or why would people choose a specific money and have all of the value in the world get transferred to this money that someone arbitrarily selected? Gold, which is an element on the periodic table, was created before humans existed, and we came about finding it in nature and selected that as money. Why would all the value switch to an engineered money, aka Bitcoin, by humans? And why would people allow the trade of their goods and services to be transacted for very little Bitcoin, so to speak? So, the difficulty I have with accepting his quote common sense is that he and others that are pro Bitcoin come to the conclusion that people must adopt Bitcoin, and that just by owning this, just by owning this engineered money, Bitcoin by man, that all of the value that you just miraculously become wealthy beyond all recognition just because you own a currency and you did not put any sort of effort into the system providing a good or a service. So why is that the case? And I understand they need people to adopt Bitcoin in order for it to maintain or increase its value. The way that I view this is it's just a gigantic bubble. And that's my, if I'm wrong, then I'm wrong. But that's the way that I view it. And the conviction and the way that these people talk sounds like crazy talk to me because they are so sure in themselves. They are so entrenched in it, and their views are so one dimensional. And I'll show you some other, another person's opinion too. And I'm more on Tom's thing, and Ray Dalio and some of these people about diversification to some degree. Never put all your eggs in one basket, because if it doesn't work out, obviously you get absolutely totally wiped out. But if it does work out, those that are concentrated can produce the most amount of wealth in the shortest period of time. That is true, but it leaves you subjected to potential ruin. The U.S. is set to dominate global LNG natural gas markets in the coming decade. Liquefied natural gas ramp commences in 2025, and exports go up to the right through 2030. And this is the LNG industry has managed large expansion before. diverse demand sectors poised to consume new LNG supply. So we've got that coming along. This is the marine sector continues to reduce emissions through liquefied natural gas. Liquefied gases can combine with technology to help reduce emissions. Projected LNG bunkering to 2028. Look at that move. Boom, way up of LNG. Here is about 80% of new LNG supply by 2030 from Qatar and US. 3 independent commercial structures for LNG to coexist. And this is US growing rapidly, Qatar growing and reducing market share as time goes on, and other SPAs. So really, America is the big grower here by far. And here is North American LNG capacity versus LNG production outlook. In 2015, we were basically nothing, and in 2030, we've got a massive ramp. So this is a huge growth industry that's coming for liquefied natural gas terminals. That's what we're seeing here, and the takeaway capacity. I do think it's going to have an impact on the price of natural gas in America, for sure. It will also have an impact on fertilizer costs, because natural gas is a input to fertilizers costs. And if natural gas price goes up, generally what we see is the price of fertilizers. Urea ammonium nitrate goes up. And here's another one of the Bitcoin people. And just listen to this. The worst case scenario for most people is Bitcoin going to 100K, then 250K, then 5 million plus. There is so much money on the sidelines waiting for a dip. You need to understand that most people have no allocation. This is game theory playing out. Everyone is trying to predict everyone else's next move. And retail investors will be the ones who make the worst decisions here. Stop waiting to buy if you have cash set aside. You will be able to buy less Bitcoin each week, month, year for a very long time, says Rajet Soni. Does that sound like he's trying to get you to buy Bitcoin by saying, hey, look, this is going to run away from you? You got to jump in. You just got to jump in. Yeah. So here's a thought of mine. We, from 1980 all the way till today, the Nasdaq and financial assets have dominated because of a lowering of interest rates. As time has gone on, we've seen a vertical move in a lot of these asset classes, the S&P 500, the Nasdaq, and individual companies that are associated within those indices. What if? This is just a big what if. What if Bitcoin and cryptocurrencies are an extension of that market going vertical in the Nasdaq and the S&P 500? What if this is a derivative of the biggest bubble that we have ever seen in humankind? And it's just an extension of the bubble. Tulip mania was a bubble. The Nasdaq could very well be a bubble at the pricing that it's at, and we could see things crash. Name a couple of things that have been engineered by humans that have lasted forever. Anything. Houses degrade and they basically turn to rubble over many, many years. All fiat currencies are engineered by humans and they all fail. Technological designs over time have changed, morphed, and been replaced with new designs. I can't think of things that have very much stayed the same. You can look at cars. Obviously, cars in the 1930s changed in the 40s, 50s, 60s, 70s, and today they're even changing. They look different, they've got different designs, and they've been replaced with better technology and better designs. What makes you think that Bitcoin can last the test of time? What makes you think that it's not just a derivative of what we have going on today in bubble land and valuations. And that's where my doubts come from. The design of the system and the flaws of the design will come out at some point. What makes you think that supercomputers can't break this code or this system or the design that's engineered into it? There's always flaws if you look close enough in any design. And gold, and I'm not stating that gold's going to be better or worse, it's just an element that we find in nature. And we have selected the element that best represents what we want from it. So it's a material. And materials in gold last the test of time because it's been here many years before humans existed, and it will be here many years after humans existed. And we just transfer the ownership, quote, ownership of those metals over time. That's all it is. So, and here's another thing. What if Bitcoin was created by governments to open the idea to digital currencies? What if it was created to soak up liquidity in the system? What if it is a head fake where governments create it, they use it to soak up liquidity, to push people and suck people into it, to take demand away from other things? I don't know if that's the case. I'm not saying it is. I'm just asking, or stating a potential problem. That's all. Predictable cycle set to turn or different this time. It says long-term perspectives on stocks, emerging markets versus US equities. And again, the bottom of these bull markets in commodities occurred here. It was in the early 70s. We came down a little bit and then it jumped towards the end. We had 87. That was also a big bull market into the 90s, and we had an expansionary phase during this time frame where the dollar lost value. 1990 is when it peaked for the housing market, and you can see we peaked a little bit after 91, so there was a little bit of momentum in the system. We crashed, and this was another housing expansionary phase of real estate. From the bottom of 98, 99, we had a big move up, a consolidation back, and then we ran. Today, we are probably bottoming in this ratio at a very cheap level for emerging markets. And it also coincides every single time with our expansion phase of real estate, which we're in an expansion phase of real estate today. Grady says, in a few years, many will look back and realize they overlooked this chart. That would be a life-changing mistake, an action that would not be reversible or possible to make up for. This is the bull market one has to get right. And this is First Majestic versus NVIDIA. A very probable false breakdown, and expecting an around the apex move where we get a gigantic slingshot of silver, which AG is First Majestic, but silver outperforming the technology areas. And this is also stating that NVIDIA is in a bubble and that technology stocks are in a bubble. And again, I look at crypto as an extension of that bubble. It is a creation that was created at the top of a bubble. And if it collapses, we don't know if it will survive that type of collapse. And this will be a running into physical metals to protect your purchasing power. Now, it is possible that people do run to Bitcoin to protect their purchasing power. That is completely possible. And it might be engineered in a way that that the governments want you to run them. That's the difficult thing to know. It might be kind of hard to believe, but the New York FANG index has not outperformed energy stocks since April. I know it certainly doesn't feel like it. So this is New York FANG divided by, so New York Stock Exchange FANG Plus Index divided by the S&P 500 Energy Sector Index. To me, this looks like it wants to go lower, where the S&P 500 Energy Sector Index outperforms. Whenever things are angled upward in a rising wedge like that, That's where you could potentially get a move lower. If that's the case, and we're seeing a lot of positive signs of energy outperforming, which is really weird. A lot of people are very negative on energy at this time. The sentiment is absolute trash, and that's generally the best entry points. But when I start pricing some of this energy stuff, I see huge potential in some of these charts. But this looks like we could underperform, which means that energy outperforms the New York FANG. Coming down here, it says, I think a simple chart is valid. Said back in 2016 that I thought $10,000 gold was a given. Now, Grady thinks that it's $48,000 gold could very well happen in today's currency value. The future gold price is not about what seems realistic today. It is about the structure of the coming monetary system. And again, this is the largest, very probable bullish rising wedge continuation halfway pattern I have ever seen. We had the inflationary 70s, that was the first bull phase. The second bull phase was in the middle of that pattern. And then we've got a third bull phase. In his opinion, it's the final one. And it says this chart does say target is 48,000, which would be the approximate number if USD M2 was back to 100%. The breakout already back in 2020, then backtested the 1673 level in 21 and 22. And now we've got a big move that's ahead of us. The reason we get this big move, I think, is twofold. It is the devaluation of the dollar, which scares people into gold. And I also think that we are in a bubble in some of the other areas, which will cause money to rotate out of those areas and chase into this. And obviously, I'm a huge bull on silver. I'm a huge bull on platinum, even palladium in these types of conditions. And oil, which is the most inflation sensitive, could also do some really, really crazy stuff here. It's all dollar problem. Cryptocurrency just saw the largest weekly inflow in history of more than $6 billion coming in. Now, is this a start of a new trend, or is this the end of the trend? Which means that money is finally getting sucked into it for one last big blow off top. I don't know, but we'll watch it. Here's the dude. It says silver to dollar ratio is $1,000 per ounce. The paper to silver ratio is 410 to 1. A massive short position of around 1 year's world production. Deficit last decade. Derivative price is 60% of all-time high in 1980. He says he's going balls deep in physical silver only. Now, I don't go in one thing only, but I do like physical silver. Now, silver, there's value in silver to humanity because it's the number 2 commodity in the world in terms of its uses. So people need this. This isn't like something that people want or they think they can necessarily just get rich off of. Like, there are legit needs for silver in our world for industrial purposes. Same with copper, and same with gold to a much lesser extent. And that's where things could get real interesting. If we get a currency problem, and if the dollar has issues, people could run towards silver to preserve wealth and to also diversify to get out of the system. Out of the system as in, I don't want digital anything. But the problem is, what about industry users? If silver becomes a lot more scarce, we could also see industry panic. And if industry starts to panic, they could start to just say, screw it, let's go buy mines. And they start to buy up entire mines or at least stakes in mining companies. That is a possibility. That's all I'll say there. And here it says the dollar to gold ratio now is at 7,303 per ounce. And the paper to gold ratio is 132 to 1. This is arguably the most important thing happening that no one knows about. And it says breaking the Federal Reserve's emergency BTFP dropped by a shocking 30 billion this week, leaving only 26 billion left. Jerome Powell is pulling the liquidity rug away to trigger a crisis exactly like February of 2020 is what this person is saying. And that is the assets, other repurchase agreements. We've got asset liquidity and federal facilities. And then assets, which is liquidity and credit facilities, loans, other credit extensions Wednesday. And there it is, pulling on back since September 18, 2024. Could we pull a false flag event and then that triggers Jerome Powell and allows him to print a bunch more money? Maybe. To predict this, I don't know how you could predict it. Is this the information needed to predict that? I don't know. Here's Apple. It says bellwether breaking down. Another smoke signal that this manufactured bull is coming to an end. Big move up, a rising wedge, which is underneath it entered from the top side down, squeezed in a rising wedge, and is broken to the downside with a flag pattern that's inverted. That suggests a lower move. This will also could be an extension of the bull market ending. Maybe, I don't know. That could also mean that cryptocurrencies are potentially peaking out here. And we're seeing that the meme coins are ripping, which is generally means that the end of the move of Bitcoin is probably near. Maybe, we'll see. I'm not in these sectors though. I'm only buying the undervalued stuff. I'm not in this overvalued crap. I'm not in it. I won't be in it. Here's Cycle Investment Strategy says that chart is so contra-narrative that probably 90% of those scrolling by are just ignoring it. Looks like it's time to dust off the good old oil stocks again. And this is XLE, which is an ETF, versus QQQ, which is Nasdaq. I think it's Nasdaq 100, if I can remember. We have a falling wedge, and we've broken out to the upside for XLE to outperform QQQ. And we're seeing the relative strength indicator go up. Problem is, when this thing bottoms and rips, that's when Powell needs to destroy things. He's trying to stop the move. He's trying to stop the rotation of liquidity from the bubble area, Apple technology, and have it rotate into energy and other commodities, because that's going to show up in the consumer price index. It's going to show up where everyone's going to struggle, and they're trying to stop that rotation. The problem is, I don't know if he can. I don't know if he can stop that rotation. I'm positioned in the cheap stuff, energy, for this move to go higher. Downward facing patterns generally break upward. Upward facing patterns generally break downward. And when you compare the two against each other, energy is going to outperform the Nasdaq. And it's always the most difficult to do that with price not telling you it's going to do that. We have to rely on technical patterns for these breaks because we are front running the money flow. I'm already in it. I'm already front runned it. Here's Grady. It's another one with, and I go over this again and again, guys. Silver in its historical long-awaited breakout mode. Oh, I already went over this one last time, so we're going to end it there. But that's what I've got for today, guys. Give me a thumb up. Subscribe to the channel. Subscribe to the website. I've got a bunch of silver companies, gold companies, energy companies, a bunch of stuff in commodities because that's where the undervaluation is. Yes, you can underperform during certain periods of time when money rotates and shifts back and forth. I don't chase price. I chase patterns. I chase value. That is where people outperform over longer periods of time and have done so with a high probability of success. So that's what I do. I'm a robot with, you have to control your emotions, get rid of them, run after value, chase the technical patterns that look good, and chase things that are really low. Then you have to wait. You wait for that money to come and rotate in under a changing market condition. The changing market condition is going, in my opinion, to be led by an increase of interest rates. And then the increase of interest rates is going to put pressure. Well, it's already putting pressure on bonds because that's why rates are going up, but it's also going to put pressure on the stock market and the Nasdaq and these bubble areas. Because as interest rates go up, your risk-free rate of return is what they call it, gets priced into the stock market, which will push that down. Now, are we at the critical levels where it's going to push it down yet? That's what nobody knows. Is it 4.5%, which is roughly where we're at? Is it 5%? Is it 5.5%? Difficult to know. So we're waiting for that to occur. Now, is there a possibility where interest rates go down because of a slowdown in the economy? That could also happen. That's where precious metals do very well under. And that's where all of the patterns are suggesting that this is going to rip. Could we continue to go up in interest rates? We could, because of the people's unwillingness to buy government debt. So who's right and who's wrong in the short term? Don't know. No one knows. No one knows if rates are just going to continue to go up or if they are going to do QE or some other tactic to get interest rates down. Don't know. But that's what we're watching. And we'll continue to watch it. We've got huge setups in silver and gold, huge setups in energy that I think are bottoming and starting to play out at some point. And we'll see what happens. So that's what we've got for today, guys. We'll catch you next time. This is Finding Value.